Hey everybody, thanks for joining us here this morning. Core topic here, why we want to short more retail. There's a whole host of reasons why, and I want to go through. I've got 45 names on my idea list, so I'm going to go through some of the top macro retail factors happening out there, and then hopefully we can go through speed dating on a whole lot of ideas, because there's really a lot that we could talk about. First, let's just go to the quad setup. You see this every morning. We're in quad 3. We're going to quad 3. We're going to go to quad 3 again, and we're going to still be in quad 3, 4 quarters in a row. So if you want to look at what to own, as Keith talks about every morning, you want to own Utes, REITs, and energy. You don't see retail on that list. You do not want to own retail in quad 3. You want to be underweight a number of things, one of which is staples, and anyone who actually sells staples, which last I checked, those things are called retailers. Let's look at retail specifically. So if we dive down and back test what type of names work well in a quad 3 environment, you actually want to own textiles and apparel, which I was actually shocked to find that on there. You want to own auto parts, and you want to own dollar stores. And we have a number of those on our best ideas long list. You want to be underweight mass multi-line, which are your Kohl's, your Targets, your Walmarts. Also includes Amazon, which is a big one. And you also want to be underweight auto dealers and autos. I don't cover autos, that's Jay Van Sciver, but auto dealers, you want to stay away from there too. Now over to the retail process. This is what we call our Sigma analysis. Sigma, sales, inventory, gross margin analysis. Basically, this is, I live and breathe by this thing. Essentially, how you want to read this is on your vertical axis. It's your sales to inventory spread. So if a company's sales are growing faster than its inventories, which is bullish, you're going to be high. If your margins are up, you're going to be on the right side of this graph. If your margins are down, you're going to be on the left side of this graph. So let's just look at where we are right now. You see that little blue dot. We're in the wrong place right now, and retail earnings season hasn't even started yet. So we're going into this retail earnings with sales undergrowing inventories. We have too much product on the water, too much product on the shelves, and too much product in the back room, and that's a problem. So gross margins are going to be a tough setup this upcoming quarter. And on top of that, margins are down. So retailers are going to have to take it on the chin. They're going to have to clear their back room, and they're going to have to take discounting. That'll be a gross margin hit, which will be just another profit pressure that retailers are seeing that they absolutely don't need right now because growth is slowing.